Hello everyone, Professor Christensen here. Today we are going to do debits and credits in 10 minutes or less with me, the accounting prof. Okay, so what we're going to do is we're going to look at 4 rules and then we're going to use 3 questions and an answer to analyze accounting transactions. All right, so here we go. Rule number 1, debit means left, credit means right. That's all there is to it. Debit means left, credit means right. Does debit mean good? No, debit does not mean good. What does debit mean? It doesn't mean good. It doesn't mean something coming in. It doesn't mean any of those things. Debit means left. Okay. Rule number 2. Total dollar of debits equals total dollar of credits. All right. So sometimes you'll have more than one debit in a journal entry or more than one credit, but the total dollar amounts have to be equal all the time for every entry that you make and in every business at every moment. All right, if total debits are 2,000, total credits are, you got it, 2,000. Okay, rule number 3, debit accounts increase with the debit, credit accounts increase with the credit. Now we're going to find out which accounts are debit accounts and which accounts are credit accounts in a minute. But we have to remember debit accounts, you increase it with the debit, and a credit account you increase with the credit. The opposite is also true. Debit accounts decrease with a credit. Credit accounts decrease with a debit. All right, more on that in a minute. All right, so to increase a debit account, what do? Debit it. All right, rule number 4. Dealer tells us which accounts have debit balances and which accounts have credit balances. All right, so let's look at dealer. Our debits are, we start with D for dividends. E is expenses and A is assets. Our credits, liabilities, owner's equity, and revenue. All right, so one of the keys is, of course, you need to know which kind of account you're dealing with. There are other videos to take a look at to learn how to classify the accounts. Okay, so that's kind of fundamental knowledge that you need in order to do the debits and the credits. All right, if an asset increases, you got it, debit it. Okay, if the asset decreases, then what do? If the asset decreases, you credit it. All right. Okay, as promised, 3 questions and an answer. These 3 questions will help give you the answer of what to debit and what to credit. Question number 1, what accounts were affected? Number 2, did they increase or did they decrease each of the accounts? What kind of balance do they have? Do they have a debit balance or a credit balance? And that will give us the answer, which account is debited and which account is credited. All right, I'm going to go through a few questions and answers with a few examples. There are more here on this website. There are some other debits and credits here for you if you want more details. All right, first, you buy equipment and borrow money from the bank. What accounts were affected? All right, so here you see equipment. That gives you a hint. Equipment was affected. You borrow money from the bank. We call that a note payable. You sign a note, you borrow the money from the bank. All right, so equipment and notes payable were affected. Did they increase or did they decrease? The equipment went up, right? We bought equipment. We got some equipment that we didn't have before, and we got a note payable that we didn't have before. We borrowed money, so we owe more money than we owed before. All right, so they both went up, right? Equipment went up, notes payable went up. What kind of balance do they have? All right, so you have to go back to dealer. You have to know that equipment is an asset, notes payable is a liability. So equipment has a debit balance, notes payable has a credit balance. All right, now we put it all together. The account we're going to debit, because equipment has a debit balance, it's increasing. We debit the equipment. Notes payable has a credit balance, it's increasing. We credit the notes payable. This is the reason why debits and credits give students trouble, because you have to make all of these decisions every time you make a journal entry, and you have to decide what to debit and credit. It's a lot of decisions to make, but I can tell you, after many, many years of teaching, when you do this enough times, you will be able to say debit this and credit that without thinking too much. It will become automated. But Requires a lot of practice. So keep practicing, don't get discouraged. Next up, issue common stock for cash. What accounts were affected? All right, well, common stock is an account, cash is an account. So basically what's happening here is that stockholders, investors are putting money into your company. They're giving cash to the company and the company is giving them common stock. So the two accounts that were affected were cash and common stock. If you were a sole proprietorship, this could be a capital account for your owner. All right, did they increase or decrease? Cash is going up because cash is coming into the corporation. Cash is going up. Common stock goes up whenever you issue more shares of stock. So they're both going up. Common stock is increasing, cash is increasing. What kind of balance do they have? Well, we know that cash is an asset. So cash has a debit balance. Common stock is an equity account that has a credit balance. All right. So finally, we need to decide what was debited and what was credited. Again, both increased. So we're increasing a debit account, we debit it. We're increasing a credit account, we credit it. So debit cash, credit common stock. Okay. All right. Pay rent. What accounts were affected? Okay, so one thing I always tell students, when you see pay, if the company pays something, what does that mean? That means that money is going out. So cash is going down. You don't see the word cash here, but you have to know when you say pay that cash is going out. Think of it from your own perspective. If you pay something, cash is leaving, right? So cash is going, we'll get to the increase or decrease in a minute. Cash is being affected. Rent expense is being affected. All right, so those are the two things. We are incurring, we call it incurring rent. In this case, we're incurring it and paying it, right? If you hear the word incur, students get a little confused by that. It's really just, think of it as like occur. It occurred to the corporation, okay? All right, now, did they increase or decrease? Well, in this case, cash is going down, right, because we paid it out, and rent expense is going up because we have an expense we didn't have before. Cash went down, rent expense went up. What kind of balance do they have? Well, we know from experience from the last few transactions, cash is an asset account. It has a debit balance. Rent expense is an expense account. It also has a debit balance. So these accounts both have normal debit balances. However, one is going up and one is going down. In this case, we're going to debit rent expense and credit cash. We're crediting cash, even though cash is a normal debit balance, we're crediting it to make it go down. Okay? All right, last one, we perform a service for customer and we get paid. Okay, so what accounts were affected? Well, when you perform a service, that means you earned revenue. Okay, so perform service equals service revenue. When you get paid, what is being affected? Cash. Money's coming in, right? So the two accounts we have, cash and service revenue, did they increase or did they decrease? Well, you're getting paid, cash is coming into the company, so that means cash went up. We perform service, we have more revenue than we had before, they're both going up. What kind of balance do they have? Of course, we know cash is an asset, it has a debit balance, right? That should be getting easy now because you practiced a few of them and you're going to practice a bunch more later with all of your homework and your assignments. All right, and so service revenue increased. Service revenue has a credit balance. That's the R in dealer. So cash has a debit balance, service revenue has a credit balance. They're both going up, so we're going to debit cash and credit service revenue. All right, well, I hope that that is helpful to you. That was a really quick overview of debits and credits. There are some more videos here that will help you that are a little bit longer that will go into some more details. Thank you for watching. Best wishes for much success in your accounting studies. Please subscribe to the channel if you like this video. See you next time.